Raj Verma is CEO at SingleStore, joining us live from California. Raj, good to have you on the show. Thank you very much for your time. What did you tell Goldman to get the funding round going?
Fortunately, we didn't have to say much because they were using our product, so the product was doing the talking. So they've been our customers for about 5 years, and they realized that they could actually almost switch off 4 to 5 databases using us. And also for applications that require low latency or real-time responses, they found us extremely useful and world-beating. So fortunately for us, our product did the talking. It wasn't me. Otherwise, the results could have been very different.
No, for sure. I'm sure you're good at selling your company as well, Raj. But the point is that, what does this funding round and taking you to the unicorn status mean in a troubled market right now where tech's obviously not the fancied space, and obviously there's all that worry about how growth is actually underperforming?
Yeah, Tanvi, we've always felt that, by the way, this is our third raise in the last 22 months, and with every raise, we have nearly doubled our valuation. We operate in a crowded market. However, the market is also the biggest target addressable market in the world, about 110 to 120 billion in databases. We do feel that data is the future, and the future of data is going to be fast and real time. We never got ahead of our skis, even when the macroeconomic environment was good or buoyant, at least. And we are not seeing any softening in demand from our customer base or our prospect base. I've always believed that, in the short term, the market can be a polling machine, but in the long term, it's always a weighing machine. And we've always run our business with that in mind. So we intend to be weighty as a company, both in the short and the long term. As I said, we've been very, very efficient in the use of cash. Our growth is over 70% year on year. Our cloud business is growing at about 150% year on year. Our dollar-based net retention is above 140%. So the fundamentals of our business are extremely strong. Almost 60% of our revenue comes from Fortune 500 customers, so extremely, extremely sticky revenue. And our churn rate is less than 0.3%. So the fundamentals of our business are extremely strong. And the future proofing of data that our technology provides is very enticing to our customers and prospects.
Raj, I've got to ask you, in terms of the 146 that you picked up for this funding round, obviously it's coming at a point in time where the valuations aren't the same as they were during 2020, 2021, or the valuations you were able to achieve. So was it necessary to raise now in order to drive your growth ambitions, considering that a lot of companies are having a lot of troubles convincing people to hand over the valuations that you would have got even if it was just a year ago?
Yeah, sure. We actually wanted to probably raise a little less, but we were just so oversubscribed, and we did want to accommodate some of the investors that were coming in, and also our existing investors like IBM, HP, Dell, who are extreme value adds to us from just a go-to-market space. We naturally needed the money for our growth, for growing our rate of innovation. We have $225 million in the bank right now, so we are going to be cash flow break even in the next 18 months. So this could easily be our last private fundraise. Actually, almost for sure is our last private fundraise, and that's what we wanted to accomplish. We didn't dilute the company too much with this raise. So yeah, I think it's the right thing for us to do, to raise the capital and take the risk out of the business completely. Yeah, we feel very, very buoyant about what the future holds for us. And we are going to be taking the fight to the competitors harder and faster.
And so what's your client acquisition strategy? Because you're saying this is a crowded space, which means that obviously there'll be more new entrants. And how do you ring fence and ensure that you don't lose clients, one, and then, of course, expand your client base?
Yeah, Tanvi, we are just very lucky to the extent that our software actually grows at the rate of, as I said, dollar-based net retention is almost 140%, which is beyond best in class. The entire land strategy for us is any company that is looking for a real-time application, whether it's customer-facing or internet-facing, where you require millisecond response times, there is just no other database in the market that can meet it. The fact really is that in today's database market, it's very fragmented. You have transactional systems and you've got analytical systems. and data is thrown over the wall between the transactional systems and the analytical systems. So our sort of voice to the data market is, Mr. Gorbachev, break down the data walls. We provide you a platform where you can transact and reason with data in a hybrid multi-cloud platform, giving you unprecedented speed, simplicity, and flexibility to your data estate, so that you can, you can meet the future at your terms.
And just in terms of the services you provide, I'm assuming that it's a platform in which to assess all of the data that is collected by these companies. But in terms of analytical functions, is that something that you're looking to do in the future? Because you've obviously got a template, you're getting these vast troves of data, but then for newer customers, you can use the lessons learned and the ways in which the data is utilized for customer X, and then provide a full service for customer Y, for smaller businesses that then are looking to have the same kind of advantage as some of these bigger customers? Or does everything need to be ring fenced and everything has to be a specific product for each of your businesses?
No, it doesn't have to be a specific product. So we are sort of multi-tenanted. So it's the same version that all of our customers use. The question about whether we are going to go into the area of BI and machine learning and AI of sorts is the question that you're asking. We actually don't intend to do that. We are going to partner, like we partner with SaaS, where they OEM us for their buyer product. We've got a great partnership with IBM. We plan to use their Cognos and their Watson Studio for BI and AI. We are going to be a domain specialist in the modern database market by combining transactions and analytics. So we aren't going to, our market is big enough, and we'll much rather partner than build.
Okay. Finally, before we wrap up, Raj, this has been a good conversation. You're obviously on the track for building a business that's fairly scalable. What does that mean for IPO plans?
Yeah, I mean, the plans are underway, Tanvir, in all honesty. We've hired a new CFO and a general counsel, both of them great leaders. We already have, plans in place.
As in, are you going to do it in the next 1 year? Underway means what?
No. Planning is underway. That's what I mean. We are going to be IPO ready in 18 months, both from a governance and a compliance perspective. And also, we are going to be cash flow break even. And we are going to be a size where we can explore the IPO market or the public market on our terms. We are still going to have almost close to $200 million in the bank, so we don't have to do an IPO to raise capital. But yeah, we'd be IPO ready, and hopefully be back on the program to share that good news with you.
Just waiting for a few other potential IPOs to go first and test the market so you can maybe secure a more solid valuation at listing, I'm assuming, in terms of the market turning as well. Raj, we're going to have
18 months is 2024.
Yeah, plenty of time.
So, plenty of time.
Raj,
plenty of time. Yeah, we'll let the other companies do some A/B testing for us before we stand on the podium. Yes, for sure.
Talk about timing the market.
Raj, we're going to have to leave it there. Thank you so much for your time and your candor. Hope all of that goes well for you, and I hope to speak to you soon. That was Raj Verma coming through from SingleStore.